Good morning, everyone. Welcome back to our SPX Daily Plan with Doc. Welcome, Doc, as always.
Thank you. Nice to be here. Nice to be here with everybody.
So the goal of this session is to provide an overview and a plan for the SPX. But before we go into the details, let me share our disclaimer very quickly. I'll pass it on to you, Doc. Take it away.
Okay. So good morning, everybody. A couple things just as a little preamble. On Twitter, I kind of post my daily plan. And so you can always find that. And I'm going to be sort of using that as a template for what I'm speaking about now. And what I do is I use the levels from Mentor Q, and we'll go over some of those from the chart and from the dashboard, which we'll look at in a little bit. And from the server, there's a lot of tools there. And also look at open interest and volatility and just some of my own stuff and come up with a plan. And we do it every day in the Discord there. And so, yeah, so with that, so first of all, as most of you probably know, we've been in this downtrend and we bottomed out yesterday. And now textbook kind of TA 101, a bottoming pattern, we like to see a red open, which we got Monday, a bottom, and then a green close, which we got Monday. Yesterday closed green. So that's the first part of the bottoming pattern we like to see. Then we have a gap up that sort of completes it. We'd like to see a green close today. That would be nice. And so putting that in the back of our minds, let's take a quick look at where we are. So 5850 is a key gamma level, round number. And so the first thing I'm looking at is what the reaction levels are going to be here at 5850. If we can get over this 5850 level, the next gamma strikes, and we'll look at that further up, are around 5865.70. We tend to stall as we approach these larger levels, these gamma levels. And so I would expect a stall up here right near the pre-market high, which is where we stalled out, and then look for a reversion and chop in this level. If we could somehow break 670.75, then there is a path to almost, to 58.95, 5900. Round numbers tend to be sticky and tend to attract a lot of interest. On the other hand, if we kind of struggle here at 5850 and could easily see some back and forth, undercut, overshoot, then next level down really brings us to 5845 to 5840.35, yesterday's close level, with a path to 5825, the next gamma level down. See how it gets to here. And should that fail, brings us down towards 5810. Now, there's typically going to be a level near the round number that's going to kind of act as a buffer or an accelerant. And should 5800, large gamma level, customers, long dealers short at this level, then the min takes the 1 day minimum takes us all the way down to basically yesterday's low. So that's kind of the basics of the game plan. Now let's remember a few things. First of all, we have PPI today at 8:30. We have CPI tomorrow. So I expect volatility to remain bid. Let me change screens real quick if I can. I'm not the most tech savvy in the world. Okay, if I want to go to the SPX term structure for a second. We're in backwardation right now. And so if you see this term structure chart, you see how elevated these peaks are here in volatility. This is the CPI, PPI, and then we have another event here, and then we should go into a normal contango, a normal Nike swoosh shape like this once these events are out of the way. So I'm expecting this backwardation and this chop to last for another, day 2, 3 into options expiration. And then we see how things kind of clear out after that. And we hopefully get back into a more normal volatility structure. So with that said, let me switch over here to VIX for a second. Now it's hard to visualize on this particular chart. Do we have VIX? No, I hit the wrong thing, excuse me. Well, that's something I want to highlight on VIX as I think is very important. Now you can't see it as clearly over here, but if we just look at VIX open interest and have to kind of visualize things for a minute, there's lots of open interest here at 20, and that's throughout the different expiry. We know as much as we can know, that market makers are short this gamma customers are long 20 calls. We also happen to know that they're long the 22s, which you can't really see clearly here. And so the whole point of that is if we get up to 20 like we got yesterday, then market makers have to start hedging by buying VX futures, which creates this whole negative cascade, volatility increases, and we get, reflexive selling spill over into the SPX complex and into the, and into single stocks as well. So this 20 level is going to be crucial. To the downside below 18, which we were near yesterday, is going to be crucial to kind of have some kind of stability. I'm expecting 18 to 20 chop until at least, the events are out of the way on Thursday and maybe options expiration day on Friday. And then we'll see how things shape out after that. Okay, back to the SPX. So along with that, let's take a quick look at VIX. That's the 3-month VIX. Okay. I'm not sure why it's not showing up. I must have done something wrong. Okay, well, user-defined error. I guess I didn't load the VIX properly. And so we can see where VIX is, and we know we have those levels here at 20, and we have those levels here at 18. And those are going to be key levels to watch in VIX. And I like to do around the horn at the big names. Apple is continuing to show weakness. So Apple and Nvidia, as we know, are both large weights in the indices. And so as they go, so will go the market. Yesterday we had breadth was good except in the mega caps, which kind of put a drag on the index, and later in the day they sort of recovered. So we got to watch Apple and this 232.50 level, and below that 230. We undercut the 230 yesterday. When we get to these round numbers, we tend to undercut and look for a bounce or continuation down. Now let's look at NVIDIA. Yesterday I noticed unusual volume in the NVIDIA 138 calls. They were about 93 cents when the trades came in. I was just kind of looking at Thinkorswim Trade Flash. And so if NVIDIA can get over this HVL area, then we could have a path back up towards the 140 level. Maybe not through OPEX. This is a large level into options expiration. January expiration is the largest expiration for single stocks. So these levels are going to be sticky and magnetic through Friday. And now I just like to look at the Mag 7+ type names. So these are all the levels that are available in the Discord, or you can also look at them on the website, which we'll go back to in a minute. So Amazon over 219, 220 could accelerate up there. Let's look at Google. Google's showing a little weakness here. So we're kind of getting a mixed picture in the Mag 7 names. Meta's been acting well. It's over this 600 level, which is important. There's a lot of open interest here at 600 puts and calls. And once we get over the calls, market makers have to hedge by buying. So we have a nice little tailwind here as long as we can stay above 600. Just FYI, I have a long butterfly that I did when non-investment advice, when we were below 600, targeting being long 600, short up here at 620, and then long 640, whatever it was. I probably broke the wings. I like breaking wings. And so, you know, and that's just another thing that one can do. You can kind of build a butterfly strategy based on where some of these levels are, as wide or as short as you like. We also have, let me open this up. We also have bank earnings starting. And so I like to take a look at XLF, see what that's looking like. And XLF, as you can see, kind of bounced off that put support level. There's been a lot of calls at the 50 level out into March that were bought, just FYI. And, well, I assume they were bought. I just know that the volume comes in. And so this is, and bank earnings season starts coming up. And so that's going to be an important tell for the markets. Okay, I thought I did that one. I think we should have JPM. I guess I never did the banks. Okay, never mind. But we can just kind of look at the chart pattern with traders and see JPM is looking bullish into options expiration. and into the earnings. Now let's take a look at, I like to look at the ETFs. SMH, this 250 has been an inflection level. We're kind of below 250. We seem to be able to, when NVIDIA is acting nice, we get over the 250 and kind of fail. And then when NVIDIA and the rest of the group isn't acting well, we've been going down toward these 240. Now I tend to be a premium seller, so I've been selling calls up above, up here, 275, 280 into February, and been selling puts down here, way above and way below the min-max levels. And let me show you a trick. If we look at SMH over here at the swing model, it kind of gives us the time as I hit the wrong symbol. If we look at the swing model and we see where we're right in the middle of the bands, but we can kind of see where the bands are, and we get, I just like to sell over and under the bands. That's me. And if we look at the matrix, I see 270 is the highest level for March. So I want to be at 280 we have in February. So I just kind of, if I'm selling premium, I want to be above these levels. I could do broker wing butterflies, can sell ratio spreads, a lot of different strategies. I'm not going to talk about strategies, although Dan and I were talking about doing something where we talk more about strategies. I think that might be in the works. Correct me if I'm wrong, Fabio. TLT, treasuries keep getting sold, inflation fears, I'm assuming you guys all know the narrative. Fears about tariffs, and there's different things coming out that the Trump administration may be softening their tariff approach, and then it gets walked back and walked forward. So we've got that. Also for today, so in my daily plan, in my note, and again, this shouldn't be rocket science to anybody, all these levels have to be taken with a grain of salt, depending on news. News flow is going to trump everything. And so aside from the PPI, which we talked about at 8:30, coming up in roughly 11 minutes, we have Kansas City Fed President Schmidt, I believe the name is, at 10 o'clock. We have the Beige Book at 2 o'clock. And we have Fed Williams at 3 o'clock to cap the day off. Now, we know, quote unquote, that Fed Williams tends toward the hawkish side. He tends toward the data. Let me see. I have a quote from him somewhere. Let me see if I can find what. I can't find the Williams quote. Let me scroll back on my little notes here. All right. Give me 1 second. Okay, well, I can't find the quote right now, but he tends to, like the last time he spoke, he's basically worried about inflation and he'd be fine to pause. Versus Schmidt is more focusing on the dual mandate employment and inflation, and tends to have a more balanced approach. Again, I'm not a macro bro. We have Tim that kind of does some of the macro stuff here at Mental Q, and he can give much better nuance than I can on that. Getting back to my field, stocks and options. Okay, so we have NVIDIA, we have Tesla back over 400 key level, core resistance. Now remember what that means. These are long calls. Customers are long these calls, market makers have to head. So this becomes a magnetic level, and once above it, we can squeeze up. So Tesla could do some of the heavy lifting today. There was some news about Tesla buying TikTok. I don't know, something like that. Q's trying to be, had a little pop in the morning, and now it's pulling back, basically a little green from yesterday's close. Now, I mentioned in my notes, again, which is on Twitter, that QYLD, which is an income, a leveraged ETF, well, it's not actually leveraged. It's an override ETF where they buy the index or the equivalent thereof and sell an at the money call 30 days out, and it's kind of an income generator. QYLD rolls on Thursday before expiration. They buy back their short calls. Why does that matter? I'll tell you why that matters. That matters because their short calls roughly correspond to about 220 to 520 on QQQ. So right now, those 520 QQQ calls have a low delta. Buying those deltas back isn't going to matter much. However, if QQQ can get moving, and those are 25 delta, 30 delta, buying those back could give us a bit of a lift. So that's something to put, in the back of your mind. Watch the delta, the 520 delta going into Thursday, what the delta on those calls are. I'm going to stop speaking now and see if there's questions, comments, if Fabio wants to share anything, or if anybody that's in the audience has anything they want to talk about.
Thank you, Doc. Let's see if we get more questions. Okay, we have a question from Tim.
Okay, good question. So the IC Man and some of you who aren't regular followers, there's a large non-institutional trader that sells large iron condors, usually 5 wide, usually 20 delta. He starts with around 5,000 contracts, and then if he loses, he just keeps doubling in size until he wins. And it's called a martingale simulation. He just keeps doubling in size until he wins. So no, he's not here today. But who we do have for tomorrow, there's another systematic fund. This is I'm assuming it's a hedge fund that sells 20 wide put credit spreads, usually 3 or 4 DTE. Now they had 57.70 short puts yesterday, and when they closed them out, they closed them out yesterday at around 10 o'clock-ish. That's when we got a pullback. Oh, I'm looking at the wrong day. That's when we got that pullback yesterday. When they closed them out Let me find the right time. So yesterday, if you remember, we kind of opened green, and then when they closed them out, we got that pullback. Why? Because they're buying back long delta, or they're buying puts, and they rolled it to 57, 40, 20 for Wednesday. So now that's a feature that we know is there. So we know that 57.40 is customer short, dealer long, gamma down at 57.40. So we could say, or I'm saying, you could say whatever you want, we could say that that level is going to hold. That's going to be hard to break. 57.50 for tomorrow, barring some crazy news, is likely to hold. Of course, we have 5,800 that we've got to get through. 57.50 is a large open interest level, round numbers. So that could be magnetic if things get nasty. And so I like to sell premium. So I sold, as soon as I saw that, I sold puts below there. And I did one contract of what they did. I got about $600 for it, as I like to call it, for science. So it just kind of track it and see what happens.
All right.
Do we have people on YouTube that are watching?
Yeah. Let's see if we have more questions.
I mean, right now it's 3 minutes to PPI numbers.
Yeah. Yeah, let's see if we don't have any questions so far, Docs. I don't know if we want to see the numbers live, or if you're like preparing for
Yeah,
that.
sure. Yeah. Okay, so now we're basically flat to yesterday's close. There goes my bottoming hypothesis. Hi, Holy Earth. To quote unquote confirm the bottom, we'd sure like to see a green close today. This is TA stuff, not GAM stuff. We got 2 minutes and we're basically flat. I'm imagining VIX is probably popping. Oh, there's my VIX. See that? I knew I had it. I guess I must have clicked on VIX 9-day instead of regular VIX. And you see VIX is getting, close to that 20 level. Yesterday, VIX, when VIX gets above 20, it's going to get nasty fast. Conversely, the closer we get to 18. Now, 18 is a inflection point because there's puts and calls at 18. And so then the hedging is much more favorable. Not only are they selling the VIX future hedges that they had to buy for us approaching 20, but they're actively selling more to balance out the 18 going out of the money, 18 calls going out of the money, and the 18 puts going into the money. Okay, looks like it's party on Garth mode.
Wow.
All right, so 5,900 in play. Now, another point to make about volatility, and really you can't look at VIX for this. That's not going to tell you that. I mean, it will to a degree. But I'll just make a general statement about volatility. When volatility goes down, the strength of the gamma levels strengthen. If you think of volatility and its effect on delta, higher volatility stretches the delta. There's more room for a given, there's more range for a given strike or a given range. The opposite, when volatility goes down, then the range contracts and the gamma gets sharper there. Now, we also could be seeing calls being bid today, which will then skew us to the upside. So this is good. Okay, so if you put sellers like me, sell your puts. If you're scalpers, we're safely for now over the 58.50. I'd be looking for continuation. We're kind of at our near-term destination. We have these levels here. You see, 3 and 5. I would look for pullback reactions here and see what happens at around 60, 65. Or, of course, always look for continuation to the 90, 95 level and see if we can get back above 5,900. Core PPI month is a miss. Explain to us what that means, because I'm not a macro bro.
We need Tim here.
Yeah. Tim is texting. Give us a short 3 sentences on what that means. Who missed what? So the producer price index. More about position. Okay. Oh, think of skew and all that stuff. Means it's not hot. Thank you, Barry. That's all I needed to know. Okay, so yeah, getting back to skew. So I think the way the skew is set up now. Let's go back to. Let me go back over here. And let's go to skew. Okay. So skew is the difference between the price of puts and calls.
Yeah, 25 delta.
Right, at 25 delta. And when skew is low like this, there's demand for puts, not much demand for calls. So we'd like to see skew, if you're a bull, you'd like to see skew reverse back up, some call demand. And I think that's what we're going to be seeing. And we talked about the term structure as well. We'll see how this uninverts or how it goes back to a normal contango, I mean, this is how it was a month ago, and there was still some elevation here because of the event. A month ago we had FOMC event, but you see, this is the structure. This is the line we want to see. We want to see this kind of normal structure here, not this inversion. We want to see the Nike swoosh. Yeah, now if the CPI cooperates, then there's a dagger in the bear's hearts. So getting to the swing model, upper band is 59.64, so that's the first level we want to overtake. And then like I said, the path to 50, and we're kind of there now, then the path to 5,900 opens up. Now let's talk about this. See all these out of the money puts? As we go up and as volatility decreases and as skew normalizes, all these puts lose their deltas. Market makers get to release their short hedges for all these puts, and up we go. These calls at 5,900 kind of become magnetic. So let's look at this is the oil expirations here. We can see we're still buried in puts. There's a lot of puts here. So to whatever degree these puts lose their deltas and market makers have to buy or release their short hedges, which is essentially buy, then the further up we can go. We have this longer term inflection here to get over 59.45, 59.50. Some of the people that look at gamma less locally, more broadly, kind of target 49.50, 45 up in this area as kind of a all clear sort of setup. While we're here, let's see what else I have. Oh yeah, IWM. Twisted Sister IWM. Oops, wrong thing. Let's take a look at IWM over here, and then we'll look at the charts, and then if there's no questions, we'll wrap it up. So similarly, let's get IWM is buried in puts. IWM is buried in puts, which as a contrarian, once this can get moving, if it can get moving, if the inflation narrative kind of cools down, then all these short hedges get released and we can get that outside move. I think most of us know how when IWM starts moving, IWM tends to be more volatile in both directions, to the downside and to the upside. And so if we could see IWM so you already tickle this 220 level. Don't try this at home, kids. I've been selling puts pretty close, 215 to whatever, 200. I would accept assignment, and again, that's me. I also want to check something on a different chart. I want to see where the MA is. Let's take a look. Okay, so we're right. The 200 MA is 214, 215. Yes, that's what I was selling. I was selling below the 200 MA. And if the 200 MA holds, we all know that TA, algos, whoever, whatever, like to buy at these kind of levels. So 215 is an important level, 214.94 according to my chart. And so we're over there, and we got a 20 MA at 223, so that might be a reasonable near-term target. Of course, we have to get over the 220. These calls go ITM, and suddenly we have a little squeezy action. Now, again, what might be called predictable, after that initial pop and after the initial hedging and readjusting, let me make it a shorter time frame here. SPX is kind of coming back toward that 62, 63, 65 level we spoke about. and that's going to kind of be the key level to watch. All right, if there's no other questions, I'm going to wrap it up. Do we have any other questions, comments, concerns, criticisms, or feedback for what you'd like to see more of next time?
Yeah, thank you. Thank you, Doc. Let's see. So far, no questions. I think this was great. And we're going to do this on Tuesdays and Thursdays. So we have our macro session on Monday with Tim. We have our Tuesday and Thursday with Doc. Then we're going to have a session on advanced option strategy with Dan on Mondays. And then obviously we're going to have some other live sessions available for you as well. You can, let me share our YouTube section right here.
Yeah, shameless plug. Like in YouTube, comments in YouTube seem to move you up the algo from what I'm told, and all that kind of stuff.
Yeah, so we have a very, very packed schedule for this week and next week. So we have, of course, our daily plan with Doc. Tomorrow we're going to have trading with Mentor Q with one of our professional trader and one of our user that is going to share his experience. We're coming back with Doc on Thursday. We're going to have a session with Peter on Bookmap, how to use Mentor Q and Bookmap with order flow data on Friday. Then we're back with our macro session, our advanced strategies, and then we also have another session with the Bookmap next week, and then obviously your daily plan back on Tuesday and Thursday. For those who want to look at the data that Doc shared, you guys can access all our tools directly from mentorq.com. So if you have any questions, you can try our platform for free for 7 days, and please let us know if you have any questions. For now, I really thank you, Doc. This was great. And
my pleasure.
Happy trading and good luck, everyone. Bye.